Really pleased to be here with all of you, and I can see it is such a distinguished panel coming from diverse backgrounds. So I think the discussion is going to be very rich and would be possibly also provocative. I hope it is provocative, so that we can look at different facets in terms of how the MSMEs will be facing the future post-pandemic. We have had a strategy in India, which is a growth strategy in terms of the industrial growth, which has focused in a very significant manner on the growth of MSMEs. In a country like India, which is 70%, 65 to 70% even now, as what we would say rural or peri-urban areas that dominate the country. We have also seen a very large migration from rural to urban areas, and there is also a very significant number of people who are engaged in livelihoods in the non-formal sector. So therefore, in the formal sector, also we are seeing the growth has been in the MSMEs for the right reasons. One, of course, it is because as more livelihoods outside of the agriculture sector, MSMEs tend to absorb more of this population in terms of the ratio between the capital deployed and the number of people employed. I think MSMEs far exceed large industries in the country. Then the MSMEs are also linked in the growth of large industries, because we have seen in terms of value chains or supply chains, there are a lot of forward and backward linkages between the MSMEs and the large industries. And MSMEs have also contributed significantly to exports from India. So they have been part of this, even the global supply chains in a manner of speaking. They also have done something which perhaps has not been recognized in a very insignificant manner as yet. The fact that they have been able to a great extent deal with the asymmetries within the regions in terms of industrial growth. We've seen hollowing out of the peninsular India as far as because of the coast and because of globalization. A lot of large industries have moved to those the states which have a seaboard. But the rural hinterland, much of the organized labor or much of the employment in the non-agriculture sector has come from MSMEs. And therefore, the regional disparities to some extent are also addressed by the MSMEs. We have, of course, the fact is that with MSMEs, there has also been greater penetration of financial services into areas where perhaps they would not have reached, which also has a spillover beneficial impact in the lives of the people living in that area. So we do see that MSMEs have played a very important role, but at the same time, during the pandemic, we have also seen that the MSMEs were very hard hit. Even the recovery that we are seeing is basically driven by large industries where profit margins have gone up during the pandemic, whereas the MSMEs have taken a hit, both in terms of in terms of financial capacity to deal with the breakdown or the destruction of demand in the market, which has led to also a lot of closures of MSME, large-scale closure of MSMEs, and also retrenchment of people who are working in the MSME. So therefore, going forward, as we look at what is going to be a new normal, we will need to see how we can look at creating greater resilience in the MSMEs to be able to deal with the adversity that we are now seeing. Some things have happened. We will perhaps in the course of our discussion deal with them too. One is, for instance, the new classification of MSMEs which the government has brought about, which includes both investment and turnover, and the ceiling has been raised significantly. Of course, this would mean that the startups and others will not be shy of growing rapidly because of losing of some of the benefits that the MSMEs get. But the obverse side of it is that, as we have seen in other cases, the propensity of the larger MSMEs to be able to crowd out the smaller MSMEs from the market, as well as from access to finances and to benefits, cannot be ruled out completely. And we'll have to see how we can protect that particular subset of the MSMEs. But apart from finances, I think MSMEs need much more in terms of access to information, markets, and technology to become productive. They also need resources to strengthen their financial health with greater access to finance, including fintech, driven finance, and they need to be given a different kind of a framework of protection. We have seen in many other countries this has happened. For instance, there have been free online stores for MSMEs now to showcase their businesses in some of the countries to sell products. There have also been provided with certain type of support for marketing in terms of coupons, etc., given which gives kind of discounts or so that they can compete in the market. So there are a lot of other experiments happening all over the world. We'll also see what is happening in the country. So I think there is this whole area which requires a lot of attention from all the stakeholders. And I think today, as we discuss what's happening in this area, the rich experience of all the speakers today or the panelists today is going to be invaluable. So without much ado, let me jump into the discussion now. Let us look at the first and foremost and the simplest question that comes to our mind, which is what are the various support required and the challenges faced by small businesses. I would like Rajiv and Sumita to to begin this discussion on this issue, and then maybe others can join in and contribute to it. Rajiv, would you start? Is Rajiv here with us?
I don't think he's here still.
Oh, he hasn't joined. So Sumita, would you like to?
Yeah, sure. Good morning. Thank you, Dr. Mayaram, for that good introduction and setting the tone and the stage for our discussion. So I think with respect to the challenges and that MSMEs, small enterprises face, I will just speak from our experience, which is of starting Rangsutra, which is today owned by 2,000 artisans and some others with like-minded goals. And when we started in the year 2006, it was extremely difficult to raise funds. At that time, we did not have any equity because all the artisans, and people like me, a small team of people like me who came from a social work background, did not have the capital to set up a business. So the key question, which on the basis of which we'd be turned away, was where's your collateral? Number one. And number two, show us 3 years balance sheet, which we didn't have. So at that point, we did, first of all, we decided, okay, let's go back to the people for whom we want to create employment. So I'd like to also state here that Rangsutra is a social enterprise. So our goal is not just to make profit, but it is to give regular employment and sustainable livelihoods to the rural artisans we work with. And we work in rural India. So in that sense, it was very difficult for us to raise funds. So initially we went to the artisans, and with whom I actually had a long history of association. So there was a trust, mutual trust, that this is not someone who's come to just take money and then go away and run away somewhere. So 1,000 artisans, all of whom were really BPL, I would say. Put in a lot of their faith, their courage, and the 1,000 rupees each. And that's how we got our first equity of 10 lakhs. And I've shared this story before. The other investment that came in was actually from impact investors, who realized that, yes, okay, so we don't have a 3 years balance sheet. We do not have much collateral, but the fact that all the artisans in Rangsutra had been organized and working together for the last, almost 15 years prior to setting up Rangsutra. That was a social capital which was, given importance. So
Sumita, this is quite fascinating. But do you think that from 2006 to now, the challenges have changed, or do you think that the same challenges also exist today?
Well, to be very frank, some of the challenges still exist. For example, when you go for a loan, the first thing is that, okay, the maximum loan, working capital loan you will get is this, there's this debt to equity ratio. So since our equity, our paid up capital is not very much, as only mostly artisans are shareholders. So 1:4, meaning, like, I'll give you very practical. For example, we have about 70 lakhs of paid up capital. So maximum we are able to get is, 2.8 crores of working capital loans, which we are getting from Exim Bank, actually, which came to our assistance. But beyond that, it's very difficult for us to raise working capital, And with the private sector, if we go, it's like, total, okay, you have to have 100% FD, what you have to put in FD, and supposing you've put in 70 lakhs, you'll get 70 lakhs OD. So it doesn't help at all. I mean, it's still this debt equity ratio. We are still facing a problem with that, and that's it.
Are there other similar problems apart from debt and equity?
Yes. So other problems that we faced, and is that, because we are working in rural areas, and we work with traditional artisans and link them to contemporary markets, because there are no markets for their products locally. So having this dispersed home-based production, is very, it's difficult for us to compete with large factories who are based in the towns and who are making similar products. So, and there's a lack of infrastructure in terms of even a basic, what shall I say, a Samudayak Kendra or a center out of which women could come and work, so that we can ensure good quality work at a panchayat. I mean, I would recommend that every panchayat has one, center where, say, 50, 100, 200 women, 300 could come, women or men could come and work. Especially for women, this is very important. And 80% of our artisans are women, and they need to get out of their homes and work. Otherwise, at home, when you work from home, you're either feeding your children or someone's asking you for something. So that is one thing we faced. Another one is, of course, linked to access to market information, markets, and to good quality raw material at decent prices. So this is something that larger companies are able to have they have a advantage over the small ones because of their economies of scale. So that's something we faced in the beginning, but now fortunately we've grown, so we've been able to sort of support the 12 odd very small enterprises, village-based, with our economies of scale by making available capital, raw material.
Let me welcome Rajiv. I see you have joined us. Welcome to the discussion. We were just talking about the various challenges that the SMEs face. And Sumita has taken us through some very interesting issues that still linger on. I mean, she spoke of what happened in 2006, and some of them continue even after, maybe 15 years. So, would you think that those are the challenges that still exist, or you believe that some of them have been taken care of in some manner, or there are some more challenges that have not been identified as yet?
First of all, thank you for allowing me in a bit late. I'm really sorry I missed the initial introduction and the theme and what the previous speaker would have said. But taking cue straight from here, allow me to say that the world has changed phenomenally since 2006. So today at 2021, 15 years hence, a lot of water has flown, and the introduction of technology, the digitalization, the transformation to GST, every lot of major happenings have taken place in between. So MSMEs then and MSMEs now, there is a huge difference. And yet, as we understand the world, and especially India, some of the challenges that persisted in 2006 are still the same. Uh, and yet, I mean, I must admit here that government, I have never seen a government more sensitive to MSME issues, which have regularly been addressed, and a lot of changes are coming. We have a separate Ministry of MSMEs, that was formed in 2006. But ever since, this institution also has played a major role. The demand for collateral is historical, and I think it is generation to generation. And we today have great example of CGTMSE and the institution that supports, and there are millions who've benefited. But then in 15 years, there are many more number of MSMEs or aspiring entrepreneurs and startups, if I may say, that have entered the arena. So they may still not have been benefited by that. So it's taken 15 years for even an institutional mechanism like CGTMSE to reach every banking branch, because some credit manager in some branch of some bank even till today does demand collateral. And yet there is technology. We have Udyami Mitra, we have PSB loans in 59minutes.coms and many such technological interventions. Many fintech companies now coming in, playing their role, microfinance institutions expanding base. One of my friends from the Fusion Microfinance, he's reaching out to millions of small borrowers across India, especially women. So I believe that many solutions have emerged. Some challenges have been addressed, but then because there are millions entering the MSME sector, this challenge remains till date. Let me also mention at this stage that there are some new challenges also that have come up, especially in the 2020 pandemic. For the first time today, even those who have access to funds and for whom the government took a guarantee and they wanted to introduce this 20%, and they did it, and they had a phenomenal budget of 3 lakh crore for this 20% line of credit guaranteed by the government of India. There are many, even in, I'm right now, I'm speaking from Faridabad, and it is a city of entrepreneurs, a very, enlightened and very developed block of MSMEs. There are about 24,000 manufacturing MSMEs in this city. And if I include service sector, it would be more than 100,000. And even in this city, which is just in the shadow of Delhi, many of entrepreneurs, they did not get access to 20% emergency line of credit, even though government was guaranteeing, and many banks did not even offer to them. So let me tell you that these challenges will always keep emerging. And let me also mention at this stage that somehow the banks have also resisted many of these changes, and they've taken their own time. For example, in this time of pandemic, if an entrepreneur wants to pre-close a loan, wants to maintain a fair slate, a clean slate, without defaulting, wants to sell off gold or jewelry or some asset and prepay a bank loan, the banks are demanding foreclosure charges as high as 4% to 5%. I mean, almost sinful in a time like this. So, my point was that there are some challenges that have been addressed by various institutions, technology. Some challenges new challenges also have emerged.
It's very interesting. I think you brought out some very interesting facets. Now, there are two things that come to my mind. First is, and this I have seen now increasingly in discourse, the discussion about digitalization. And there is also a huge amount of, like as you mentioned, Rajiv, about the tech startups and a lot of fintech companies reaching out to people. I'm finding a bit of a dissonance in this because what Sumita is doing is with women in rural areas, in villages, who are producing from their homes and they're asking for common infrastructure and so on. These are not falling within the definition of what we talk of as startups, because the moment you talk of startups, what comes to your mind is the technology driven startups, the tech startups. And I find that more and more discourse in the public space, even in policy space, is happening when we extol digitalization. I can tell you, outside of Jaipur, for instance, if you go 50 kilometers outside of Jaipur, during the day, there'll be 6 hours electricity in the villages. And so if you consider that you're going to have internet and you're going to have the benefits of digital India, etc., they just disappeared 50 kilometers from any city, right? You can't even charge your telephone or your computer, forget about getting an access to internet. So there is a problem in terms of being able to keep the discussion, which takes into account this very large number of people in the rural areas who are not part of this subset of tech startups, as we call them. The second issue that I also see here is this divide between rural and urban, which is happening. And I think, unfortunately, because of the pandemic, this divide has widened. The inequality is also widening, and the divide has also widened. And so, therefore, we in our conversations, and it's ironic because we are now using for our discussions platforms which are digital. We can't even be together face to face. So therefore, our world is becoming more and more virtual, digital, whereas there is this huge number of people, which we now see also, of course, with the farmers' protests, you see far more of them now than we were. They have become invisible. The people in rural areas are more or less invisible. So we are looking at MSMEs. We need to keep both of these in mind. So I will come to Arup and ask him, and then I will come to Nikunj. I will ask you, when we are looking at this issue, I think I find banks also yesterday in one of the conversations we were having here, there is a huge amount of conversation about how digitization and how has completely changed banking, how it is becoming more efficient, how it is reaching out to more number of people. Perhaps for consumer businesses in urban areas, I can understand. But as SIDBI, which has been the kind of a regulator and developer of the financial instruments for MSMEs, how do you see this divide? I mean, how do you see the world of Sumita and how do you see the world of Rajiv? And I mean, how do you find a bridge between these two worlds, if I may use that term?
Thank you, Dr. Mayaram. You have basically in the beginning also set a very good tone for the discussion of this panel. And the type of panelists we have here today brings rich flavor to the discussion because of the diverse nature of this sector. On one extreme, as you rightly said, rural, the small nano borrowers, and Mr. Rajiv Chawla representing SME. Sumita Ghosh, she's representing the micro, and I am SME, which Rajiv Chawla ji has created. So these are two different, I would say, ends of MSME spectrum. SIDBI as an apex institution for MSME, we have been taken care of, fortunately, for both the ends, and in between every institution, every requirement in terms of product, in terms of delivery, whatever is required in the entire ecosystem is what we have been all through working towards meeting those things, creating the infrastructure, institutional infrastructure, product infrastructure, as also providing funding support, apart from policy making, policy advocacy, and all those things. And while this is a inclusive finance summit, and general understanding has been all through that it would be more on microfinance, seeing the other side also gives complete shape to our discussion. And here I would like to say, for the micro, if you see the definition also in your opening remark, you mentioned about that, the revision in that, and the resultant issues you have flagged here, that also, when we see the earlier definition, it was in terms of earlier SSI used to be there in terms of tiny, small. Now 2006 onward MSME, where micro, small, and medium also brought into the definition to have focused attention of all these stakeholders. Now in this, the industries, the units Mr. Chawla is representing mostly is the larger of small sector and medium sector. There also, there are a lot many, when he's talking about trade guarantee, NCGTC has been set up in terms of giving the guarantee. SIDBI as a refinancing institution also, we have been ensuring the flow of adequate credit at a reasonable rate through all these lending institutions. Coming to the point of how do we see the rural and urban divide, so to say, although it is basically micro enterprise versus the bigger ones in the entire spectrum, and how do we take care of that? For the
Actually, I would say not just urban, rural, but I would say rural, urban, tech startups versus non-tech startups. These are the kind of binaries that have emerged. So try and kind of take all of them into account.
Yes, sir. Yes, sir. So all this entire spectrum, I would say, sir, what we should be seeing is the challenges before, challenges in the pandemic, and what going forward we have to take care of. So if we see the challenges before, the micro sector has been having all these challenges, what Ms. Ghosh mentioned about, in terms of making available the fund at a rate which would be making their livelihood activities viable enough so as to have the venture also and to eat and take care of emergency needs. That on one hand is being taken care of. If we see the MFI movement, the SHG bank linkage movement and the MFI movement, that was basically to ensure flow of credit to that segment which Ms. Ghosh is talking about. And there again, when in terms of when she was making a mention of DER, constrained by the fact that she has a limited equity capital, that also Government of India in the year 2012-13, if you recollect all of us, IMEF is what Government of India talked about, where equity support was given through SIDBI to all these institutions in MFI's space to take care of endeavors like what Ms. Ghosh is doing. Similarly, in terms of creation of MFIs as a formal sector, formal channel to take care of the funding needs of these people. So on one hand, SIDBI as apex institution, as you have indicated, we have been taking care of, we set up a SIDBI Foundation for Microcredit in the year 1999, where we helped set up the NGOs graduate to with our transformation loan, equity support, funding support, capacity builds, building support, help them set up MFIs in a formal manner to take care of the credit needs of all those millions and millions of rural poor, which has graduated now today to urban side also. And you would be happy to know yesterday also there was some discussion that 2 lakh crore is what microfinance space credit supply is, out of which around 40% is coming from MFI. So that is taking care of the supply of credit at a reasonable rate.
But at the same time, if you heard Rajiv say this, and also Sumita before that, there are big challenges in terms of being able to access that finance. The windows may be available there, but the window does not open easily for the this segment of people. For instance, they were talking about the collateral requirement or debt to equity, kind of ratios that are maintained. So for them to be able to grow, and especially if they're micro, organizations and disbursed membership, it becomes very difficult for them to really scale up. So where is this dissonance coming from if all these windows are open?
Yeah, so quickly I would like to put this in terms of supply of money is what from MFI sector you can say. Again, in terms of instruments, it has been equity type of instrument, sub debt, as also finance and refinance instrument through microfinance. Insofar as direct finance, I was there in late 90s. I was there as manager in Faridabad and used to interact with Mr. Chawla that time. And he was as active as today he is seen to be everywhere. And that time also, that was basically taken care of through our direct finance branches, our branch network. We have been on one hand giving direct support to all the MSMEs in the real, that bigger ones, units, what we say. So supply is what is happening. While on one hand, we are giving refinance to banks and NBFCs and all, MFIs and all, to take care of supply, direct supply also. This is one part of it. But at the same time, lender sentiments and lenders' comfort that they perceive MSMEs as a risky sector. And so supply has not been happening. And so collateral security, third party guarantee, the requirements, they have been there for ever, I would say. To take care of that, government with SIDBI, we are working on this credit guarantee, which is now almost there in the system, entire system, as Mr. Rajiv Chawla said. But at the same time, to take care of more types of credit needs, NCGTC is what
problem again remains. But let me come back to you. Let me just quickly jump in and ask Nikunj to respond, because she has been in that space where they have been on lending to, I believe you are on lending to NBFCs and MFIs, and you have now heard different sides of this story, both from SIDBI's side, who have been developing this whole area of MSME financing, and then from the user side, which is Sumita and Rajiv. How do you see the issues that are really plaguing the financing of these, especially the micro enterprises?
Sure. Thank you, Dr. Mayuram, and thank you, Mr. Kumar, for your inputs. As a lender, as an Apex institution lender there in India, I share some of your views where, of course, lender sentiments do need to be considered, where, of course, cannot take all the risks. There has to be a risk return spectrum, and we work on that, right? But thanks to SIDBI, the initiatives such as the CCT SME, also the CLGS, these schemes, they really benefited some of the partners that we have in India, especially the ones that provide unsecured financing. And then where I think Blue Orchard does become important is, we bring a global perspective. So we've been working with institutions in India to work when it comes to underwriting, to look at more cash flow based underwriting rather than collateral based underwriting. And then we work a lot with lenders who provide unsecured loans to MSMEs, right? In addition to that, we of course have a lot of technical assistance that we've been providing to these institutions in terms of underwriting, in terms of marketing materials, and also on technology and digitalization. I think that has become crucial. We work with everybody, say a tier 3 MFI in rural Lucknow, who's still doing some sort of digital payment or working on technology, to the larger NBFCs that are focused on urban areas, who are doing a lot of cashless transactions and payments. So we look at the entire spectrum, right? And within India, we look at the entire spectrum. We also look at the global spectrum. So we can bring in some of the best practices, talk to our clients about what are the best practices in other countries, and then support them in lending to MSMEs, and so we support on those fronts.
All right, but then one issue, and I would start with you, Arup. You know about this new classification, which has come up on inclusion of micro and informal enterprises in general terms of a scaling up. So you have now 100 crores of investment and turnover, and there's some kind of a formula that has been created to do, to define these different categories. How do you look at it? What are the benefits from this? I mean, what is really going to be beneficial in terms of the growth of MSMEs in this case, except for the fact that if you raise the ceiling, numbers will increase, obviously. But how do you really see it benefiting?
Two things on this. One, world over in past also we have been debating a lot on this as to what should be the classification of MSMEs. And in India, we had taken gross investment in plant machinery. Elsewhere, it has been either on the basis of turnover or on the basis of employees, or a combination of all these things. Even in India, some of the agencies, government agencies, have been taking turnover as one of the criteria. So this is, I would say, a conversion of these two, convergence in the sense that capital investment in plant machinery indeed would be there. At the same time, turnover also has been brought here in the definition. So that convergence happens, and there is some clarity about what exactly forms part of this. And second is in terms of the need to have it upward revised. That has been happening all through, if you see last 3 decades, that has been getting revised. And that is the need of the hour, because the inflation and all those things and the type of industrialization happening, then other types of industries coming. Now today, if you see for the type of industry like pharma, auto, food processing, if we continue with the earlier definition, then naturally that becomes very restrictive for them. Now, for the reason well known, people would like to have as much as benefit which from government and other agencies, which basically comes through this definition and being classified as MSME. For the reason then earlier what was happening was their horizontal growth was happening, which was not really very good for, is not good for any economy. So with this definition, vertical growth would happen. There would be incentive to grow vertically, and ease of doing business improves. At the same time, the point you highlighted in your opening remarks was whether the smaller ones would get crowded out. Personally, I feel even for that space, if we see in the microfinance space also, one point is that average ticket size is increasing. Today it has come to 35,000. Earlier it was 20,000 or 15,000 and 10,000. So that also is seeing upward trend, number one, which indicates, just it doesn't have any bearing insofar as this aspect is concerned, but which indicates that everywhere the size of economy or the activity is increasing, which justifies the upward revision which is there. But at the same time, the threat or perceived threat that whether they would be left out. Insofar as banks focus to MSME getting governed out of PSL requirement of RBI. So it can be seen from two perspectives, two angles. One is what is the total credit flow to MSME sector and what is the PSL part of it. So we see that PSL is not the only, the private sector lending is not the only part of total credit flow to MSME. That is one aspect to this. And second is even for PSL definition, RBI is cognizant of all these things, all these developments. And if you see, recently they have come out with one credit deficit districts they have started. And then now they are saying there would be different weightage. If PSL loan is there in a credit deficient district, they have identified 184 districts in the country, they would have 125% basis weightage, whereas in credit surplus district, it would be 90%. So all these policy from monetary, from RBI side, from government side, taken together, I think that this would be a positive thing only in the long run. And I don't think that these smaller ones, the micro ones, would be left out.
But how do you, as consumer of definitions, look at it? Sumita, would you like to take a look at it? I mean, when you have expanded the definition, do you think that the people you represent, or the people who are part of your business world, will they be adversely impacted in any way?
Actually, I must confess I haven't really studied the issue properly, but I'll just tell you the kind of challenges that I see that will still happen. That will happen because, or despite the change in definition, is that especially when it comes to, say, rural women SHG groups. I mean, for many years, various government programs and projects have been promoting women credit groups, and they do pretty well. I mean, most of these groups are doing a good job of, saving and credit. But when it comes to taking the next step, which is supposing they need, it's okay if someone needs the money to set up a shop somewhere and then they get some loan and they do it. 35,000 or whatever you said. But when it becomes a collective manufacturing enterprise, like I'm talking about crafts in our case, then it's very difficult for them to do all the paperwork needed. I'll give you an example. Like, as I said, all the artisans we work with are shareholders in our company. And the ones in Rajasthan, 80% are women. Now, when we started working, none of them had even bank accounts. I'm talking about 2006. So gradually we opened bank accounts for them, and that has helped because it helps payment of wages directly instead of going with that cash village to village. It has helped in payments of dividend in the years that we have made a profit, because all of them are shareholders. So that cashless bit, yes, it has helped. Now what has happened, there's a new rule which the government of India has brought about, which says that all shares have to be dematerialized. Now all our investors they don't have PAN cards, because they don't pay income tax, because they earn only from craft. They would earn on an average between, in a month, maybe between like 8,000 to about 15,000 rupees in a month. So they do not have PAN cards. They don't. So all that, the paperwork that's needed, KYC and all that's needed to operate within the formal banking system is really very. It's difficult. It's difficult to say the least, So I mean, even Rangsutra, which is like, okay, we are technically a micro enterprise as per the definition. But when we wanted to apply for, what was that, something called, not startup, Stand Up India, because we said we want to grow now. We have started up, now we need to grow, and this is what I need the money for. So we were told that no, but you're already getting this credit from so-and-so bank, which is a private sector bank, because we had no choice. So either you chuck them and you come all of it to us. This is from a state-owned bank I'm talking about. Or so there is a lot of paperwork, and I understand that as Nikunj said that there's a lot of risks, and as Arup also said, there's a lot of risk that financial institutions have to take. But you also have to sort of have some faith, and that's where I say that for example, especially where it comes to social enterprises, women self-help groups. They have really shown by the virtue of performance, and I'm not just talking of Rangsutra, I'm talking of so many others, that they don't run away, that they pay back, whatever it takes, they will pay back. So have some faith and, leap of faith, and look at it as an investment in, don't look at it as a risk in that sense, but that there is a, if not a, if not a return on in terms of financial investment, it's a good lot of social sort of impact that one is creating. And I'd just like to add one point here, if I may, regarding the digital divide. I couldn't agree with you more, Dr. Mayaram, that, in the pandemic, that's the world is going to be, is divided into those who have 4G and those who do not. Okay, so what we did, because none of the artisans in the villages had access to Zoom, etc. What we did, and the good thing here is that we have this amazing, what shall you call it, demographic dividend. You have young men and women in villages who are doing amazing things with a smartphone. So what we did is we set up these kind of WhatsApp calls, FaceTime calls, just to find out kya ho raha hai gaon mein, giving work from home so that they get some work out of leftover fabric that they have at home or we had during those lockdown days. And I think that here is an advantage, I see, comparative advantage, Dr. Mayaram, that, rural India, I'm talking about Rajasthan mostly because my work is in Rajasthan mostly, that there is scope here because rural, India has some advantages compared to, say, Delhi or Gurgaon or Faridabad, and that is, the rents are lower, the cost of living is lower, so we are able to be more flexible, we are able to be more competitive in that way. So this little bit of investment, and I look at it as, if I go back to my not-for-profit world, it will be called a grant, and in this world, it will be called return on social investment. So I think investment or grants and support to, to ensure that these women's groups have at least one person in the group or the group has access to digital communication would go a long way. It would really go a long way, and they can pick it up. The young women and men are picking it up very easily. How to.
But let me just kind of stick with the earlier point for a little while more, Rajiv. The changes in the definition, do you think it's going to have any impact on the micro startups or micro enterprises because the larger players will crowd them out from the financial space or the space of benefits?
I don't think so exactly, because if you still look at the micro is investment up to 1 crore and turnover up to 5 crore. Now, unless you want to create a sub-micro category, there is a, in fact, a proposal at the Ministry of MSME. They want to create a tiny segment or the micro amongst even this micro. So possibly looking at these concerns. Having said this, if there's any concern, I think a new definition, I don't know how a new definition would impact. Government can always say that even within this definition that for the priority sector, maybe, enterprises with turnover up to 10 lakhs should get more support, something like that. But then let this, definition game.
No, but do you think that would be an important thing to do? To say something like that so that the players who are in the 50 crore bracket do not crowd out the players at 5 lakh bracket?
See, this would always be there. And so therefore, but let us also say, government has a Mudra scheme. Now that Mudra scheme does not reach out to the 50 crore player in any case. So there are, a vendor, government has recently come out with, where they're giving 10,000 rupees loan to small vendors, retail vendors. There's a new finance proposal coming for small shopkeepers and retailers as well. And so, but we are a nation wide and varied. And therefore, any new scheme that addresses any sub-segment is always welcome. So if we have only one scheme and only one definition, of course, your concern is valid. But even within this definition, there are many schemes, as I mentioned, Mudra, or the vendor finance scheme, the small shopkeeper finance scheme, retailer finance scheme, which would never reach a 50 crore segment. And they're not even looking at that. So I think there is a space to do more. and concerns must remain, because unless we are concerned, this evolution will not take place.
Nikunj, you think such a definition will be useful? A sub-definition will be useful to protect the really small or micro enterprises in this enlarged definition?
I believe so, but at the same time, for us, we have our own definition of what's a micro versus a small, medium enterprise, right? And then for us, we work with microfinance institutions there to, again, we define, the different tiers of MFIs. In India, you look at systemically important versus non-systemically important. For us, we look at tier 3, tier 2, tier 1s. As a lender, we work across, and then we have different innovative products for each one of these tiers, right? We have a fund that's specifically targeting tier 3 and tier 2 entities. And then we have funds that target tier 1, the lower risk, the more established entities in India. I sort of disagree with Rajiv in the sense that I do think there is going to be some crowding out with the larger players, gaining more market share, especially in this COVID environment, where despite all of the initiatives put together by SIDBI, by the government of India, the liquidity still seems to be flowing more to the larger tier 1 entities who again focus on the more, larger loan sizes versus the more rural financiers or the more smaller ticket financiers, right? What we see happening in the market is that these tier 2 and tier 3 are unable to grow at the moment, be it liquidity constraints, be it their internal capacity constraints as they deal with, the moratoriums coming out of the moratorium, they're dealing with increased level of delinquencies. And we see the bigger players coming in and swooping up that market in a sense. But there are voids. And I think this is where, the DFIs in India really would need to step in to support these smaller NBFCs and then channel funds more to the smaller, the micro segment, let's say, and the small enterprise segment in India.
I would like to say one thing here. Very interesting point, last point, what she said, basically, the smaller NBFCs, tier 2, tier 3 MFIs, they're getting crowded out. Now, again, we are not talking about the intermediaries, we are talking about the borrowers. So if lender A is giving or lender B is giving, a smaller player is giving, a big larger player is giving, ultimately beneficiary is getting the money. The ultimate micro borrower is getting the money. Now, what Sumita Ghosh said, from there, if we plot the rise of population in the country and the rise and the plotting of people in the rural side getting bank account, people in the rural side getting SHG bank linkage, people in the rural side getting credit, we'll see very clearly it gets established that the gap is getting closed pretty fast, especially in last I can say 5, 6, 7, 10 years. This has been transformational. Any such plotting, if you do, you would be able to see this. This has been happening. So basically, what we have to think of that credit supply to the sector. Now, credit supply to the sector, if we consider insofar as this threat is concerned, there are players who are mutually exclusive. The players who are supplying credit to the micro sector are not the players, as Mr. Rajiv Challa said, who would be approaching small and medium industries. So they are distinctly different players. Their own jurisdiction is there. So there is no problem. Only thing is RBI, which already I indicated that they are working on it. They have already come out with some paper. Even when I'm saying to institutions like SIDBI, NABARD, NHB, when they give the PSL, priority sector lending shortfall funds to be refinanced, they're also now they are putting conditions that this money should go to credit deficient districts. Now, credit deficient districts are the districts historically where no large industry is there. Only such units where micro borrowers are there, those districts are there. So already these things are there. My sense is...
Arup, I think I'd like to ask you this question because I think what Nikunj said resonates with what you said, even though you said you don't agree with her. The point she made was that certain type of MFIs are going to be starved of funds because ultimately what is their source of funding? They borrow from the banks to on lend. Now, if the banks are going to start giving more money because it is safer to give more money to those institutions which are catering to, say, medium and whatever, small and medium in the new definition, and they are not going to take the risk with the micro enterprises, especially post COVID, then obviously these MFIs, which she thinks are being crowded out, are the ones who are not getting funds to be able to on lend. So seems to be some disconnect between how Sidbi is looking at it and how Nikunj has just explained. And I think I would very much think what Nikunj is saying has a lot of merit. Would you like to respond to that?
Yes, very much. That's what I said. She has made a very interesting point, although I interpret it differently. But just the last point, I will close with what Rajiv Chawla also said. Apart from credit supply through these lenders, government through various ministries, through various programs, like some of them he mentioned, is reaching out to the sector to take care of the credit needs. So it's not just this channel which is taking the credit to that sector. That is the earlier point. Now coming to this point, what Nikunj said, again, at apex level, government level.
Let me again provoke you a bit. Rajiv also contradicted a bit on that because he's saying two things. One is he's saying there are a large number of schemes like Mudra, but he also said that there was this whole scheme of giving credit guarantees by the government, and yet the MSMEs were not being able to source credit despite guarantees being given by the government. So having a scheme is one thing, and that benefit reaching the beneficiary is another thing. So
which one you want me to respond to?
So what you are speaking of is a very wide variety of schemes that have been put together for different types of consumers or beneficiaries. Right. But at the same time, as Rajiv pointed out, although in the same breath, he also said there are a lot of schemes and everybody's covered, that despite government's guarantees, the MSMEs were not able to get credit. So do you see that kind of a contradiction in the market?
Again, as this country, the MSME sector also is very wide and varied. So when Rajiv Chawla, because I know him, what sector he's talking about, and the sector what Sumita is working in. So what is happening, even if you see for the last 30 years or maybe more, there is a guideline from RBI for all the banks up to a certain level. Earlier it used to be 2 lakh of loan, no collateral security or third party guarantee is required to be taken. And so credit guarantee, when it came into being from Ministry of MSME and Sidbi, that was meant to take care of the bigger units of maybe fund required for in the range of 10 lakh, 20 lakh, 25 lakh that time. I'm talking about 90s and early 2000. So when he is saying, he is talking about that, which you see many in Faridabad today becoming too big. But when Sumita Ghosh things are concerned, such clients, such customers, such beneficiary, they never had the problem of when microfinance is being given, that is not there, completely unsecured. She will agree with me, that is completely unsecured. When they want to take it to higher level of micro enterprise, that is a transition I'll come to if time permitting and you allowing that, because that is called missing middle segment. That is separate. I'll talk about that later, time permitting. Now, so this is what is my response to what Rajiv Chawla said. But insofar as Nikunj is concerned, when we are sitting at apex level or government level or RBI level, we have entities called these primary lending institutions, NBFC tier 1, tier 2, tier 3, banks and all those things, and ultimate beneficiary. Now in ultimate beneficiary, we are talking, the topic of discussion is the ultimate beneficiary, in the sense micro borrowers, the loans being given to those people. We are talking about that. Her concern is because they, as impact investor or whatever, they have invested in MFIs. Now the smaller MFIs, they are realizing that they are not getting money. So her concern is that is perfectly valid. But insofar as micro borrowers are concerned, even if tier 3 MFI is giving loan and they are not in a position to give, in the same geography, tier 1 MFI is filling the need. She will agree with me on this at least. So, insofar as credit needs are concerned, we are.
Is there a question or a threat?
No, we are keeping, we are interacting with people. This is what is happening. But her point is well taken. Tier 2, tier 3 MFIs, they need different types of support. That is a separate topic than today's panel. So we can discuss separately. But at the same time, missing middle, that is really from 50,000 to 10 lakh loan requirement. That is defined as missing middle because up to 50,000 MFIs are taken care of. Above 10, NBFC and banks are taken care of. From 50,000 to 10 lakh credit requirement, that unfortunately for ages, means for the 33 decades, 4 decades, if you map, see the lending landscape, this is having very thin presence of any lender for mainly one reason. This is considered to be very, very risky proposition. Reason being, because the micro borrowers, mainly they work in JLG model or SHG model where some group support is there. In this segment,
local area banks make a difference. The recently licensed local
SFBs, they are like that, that they are making a difference. Even SIDBI's program called Prayas, while we have been giving support to MFIs for less than 50,000 loan, whatever they're giving, and direct finance, banks refinance for larger one, for missing middle, we have started a scheme called Prayas. It is only for this segment where we are trying to give loan through partner institutions as also bring the cost of credit to this segment to the comparable level of what the likes of Mr. Rajiv Chala's unit would get. That is in the range of 12 to 14%, which is unthinkable. And we are not just making the MFIs as the partner institutions, we are also partnering with aggregators and all for rural and urban micro entrepreneurs needing loan in the range of 50,000 to 5 lakh, even like Big Basket, Urban Clap and all those who have these service providers, delivery partners and all. They need some money for bike and all. So this experiment of SIDBI is going to disrupt the market in some years to come, insofar as availability of credit to this segment is concerned, as also the cheap rate at which we would be able to give, so that the entire thing is disrupted. So that is about missing middle. That is a separate thing.
Okay, but Rajiv, do you think that impact funding agencies or local SME networks have a role in market systems development and sustainability of the enterprises or local communities?
Sir, my answer is yes. In fact, I stand testimony to this. Years back, almost 11, 12 years back, IMSME was one of the first institutions to sign one MOU with SIDBI. And we made a huge impact in this Faridabad Gurgaon cluster. We had a major issue that if I give my, let us say, one home or one factory collateral to a bank and take a term loan and or working capital from a particular bank, the minute I want to buy, add a new machine, it could be as low as 50,000 or 1 lakh or whatever. I have to do the entire exercise of renewing my loan proposal with my existing bank. So for any sudden requirement of a small add-on, even if I have an amazing track record with my bank with a collateral given to them, they would not give me an additional machinery loan. While it is very easy for me to walk into a car showroom and walk out with a 1 crore finance car. So I took this proposal to SIDBI, and we said that we must help MSMEs take quick asset loans, even if they have a different collateral, a different banker, regular banker. And we signed one MOU with SIDBI way back in 2009. And it was such an amazing MOU, and it benefited hundreds of MSMEs in the sector. And in fact, the exposure reached as high as 100 crore. It remains zero NPA till date. So I've been part of one project that we've done with SIDBI. Unfortunately, this kind of a pilot project is done, success achieved, and then closed. What is required is that these successful pilot models should then be multiplied across various clusters, and maybe some more varied programs should be done. So I believe that every institution, be it NBFC or microfinance or a regular banker or a development bank like SIDBI, this kind of a local level alliance or networking with SMEs would always benefit. And SIDBI has had many such partnerships. I know they had a partnership even with a taxi operator union in Mumbai many years back. And I don't know whether they multiplied it across India. But if this kind of, this is real value, the real source, and it just resource, and this just has to be utilized and grown and has to, multiply across India.
But Nikunj, you think as an impact lending institution, you've had some impact on the development of the market systems and also sustainability of the financial models that may have been introduced by impact lending institutions in the last couple of years?
I believe so to a certain degree, right? And the market systems, maybe not so much. I think one of the things that, of course, sets international lenders a bit apart from the local lenders, I would say, is the ability for us to provide longer term funding, right? So that way we're able to, support the institutions we work with. Alongside, I think for an institution like Blue Orchard, we worked on several initiatives. And then to give an example, a few, we've worked on a green loan product where we've supported NBFCs to design products specifically addressing energy efficient or renewable energy sources, right? Be it solar lamps, some sort of a home electrifying system. So those kinds. We've also worked on initiatives which are targeting specifically women entrepreneurs. And then now, last year, we just recently launched another initiative, which is on COVID-19 recovery. And the fund was just launched last year. We expect to operate in India starting in February, but the idea is to work with more riskier NBFCs to support, their stabilization, their liquidity levels right now, and then also to support their recovery and growth moving forward, right? And the target there is to either maintain employment or increase employment in the MSME sectors. So through different initiatives, we've of course supported these NBFCs, some level of market systems we've supported, and definitely on the sustainability. I think throughout COVID, we've demonstrated a commitment to the partners that we work with. Despite challenges in payments, we've worked with them to reschedule, restructure. So that way, I think quite an important role for impact investors like us in the market.
Okay, so we are about to come towards the end. It's 1:47. We have 10 more minutes left. Are there any questions from the audience? I don't see any on the chat, so I guess they're not. Maybe there are questions that you may have from one another, because there's supposed to be a question and answer session, and so we need to do that. So would you like to ask questions from anyone of the panelists? Anyone from anyone?
Yeah, to Nikunj, the concern I saw, and this is what we are also seeing. What has happened is when government talked about to take care of the COVID pandemic, initially they came out with monetary support, monetary side, fiscal measures. So to take care of the liquidity, and we have seen for all these months, more than adequate liquidity has been maintained. But at the same time, two things have happened. One, liquidity not flowing to the unrated or lower rated institutions, which she was mentioning about. And second is, as Mr. Rajiv Chawla was saying, despite all these programs being available, guarantee being available, things not reaching to the units. Both the things have happened. So lower segment of both is what I have seen is happening. So when she is talking about increasing her risk appetite, this is really a welcome thing. because what I feel the solution for the lower rated, unrated NBFC MFIs is infusion of capital at this stage, with which they would be able to gain some confidence from the larger players and get some funding. So that, when she said, I personally feel that is really good, because government, if you see supply of credit through liquidity measures, through everything, means SLF, through SIDBI, NABARD, NHB, the NTL, TRO, all those things happening, cheaper rate. These were all repo linked rate. That also government ensured, RBI ensured. Then we were all through the process, and we all have seen this happening. That despite liquidity being with the financial intermediaries, things not flowing on the ground. Yes, there was uncertainty in terms of how the demand is going to be there and all. But then because of that portfolio quality concerns and all coming from this lending community, government came out 100% for the first time for this guarantees program. So to that extent, again, things are there. Now with all these things looking up, earlier than even IMF 2 days back, I was seeing the news, they were appreciative of what we are doing and the way things are happening, rebouncing and all. So my sense is from the ultimate borrower, they will start taking as also getting. But the intermediaries for the type of Nikunj mentioned about, I feel equity support type of thing is very, very welcome from institutions or agencies like us.
Anybody else? Yes, Sumita.
Yeah, so I have a question and suggestion to Mr. Arup Kumar that, like Rajiv talked about the pilot scheme that was done successfully in the past, would you be open to do a pilot scheme with, in the whole area of handicrafts and handlooms based out of rural India, based out of panchayats? They are low carbon footprints. We don't need much equipment and machinery. In fact, we are, handlooms and hand embroidery, etc. There's very little equipment required, but there's space required for operations, in that sense. Then there's also new innovations like natural dyes, etc. like that. Because why I'm saying it is that, yes, at the end of the day, finance is, whether it's microfinance or larger finance, is for ensuring livelihoods and employment. And our experience has shown that this sector of handlooms and our rich craft heritage has the ability to provide employment to millions of people, rural Indians. Sadly, many of them have left their occupations and have migrated to work as labor in building roads, etc. But I believe, because we have shown that it can be done. Our track record has shown that it can be done. All it needs is some handholding, which we do, and some help in setting up those basic infrastructure that's needed, at the village level, at the panchayat level. So would you be open to that?
Madam, SIDBI is running a program called Swavalamban. So this gels with what we are doing, and this is basically an umbrella mission to kindle entrepreneurship. And all through you see northeast, south, east, west, everywhere. And so today, with your coordinates shared, contact details shared, someone today will contact you from SIDBI. Whatever is possible, certainly, because these types of initiatives everywhere, wherever we are seeing, we are supporting to the extent possible through our credit plus approach, where it is about hand-holding support, some grant support, some programs, some training and all those things, as also wherever finance credit is needed, credit side, whatever is possible, certainly, because in Prayas scheme, which I talked about, we identified geographies, and Rajasthan incidentally is in one of those geographies identified where we are running this program. So someone today would contact you, and let's see which way we can take this forward. Whatever good work you are doing, we'll certainly like to help you reach further heights.
Wonderful. Wonderful. Anything else? Nikunj, would you like to say something? Ask a question. I would want you to ask a question.
That's a difficult one, but from my side, I did, as a closing remark, I did want to say The overseas lenders have not had very much communication, I would say, with the local DFIs, SIDB, NABARD, or the subsidiaries, right? And I think, during the course of the pandemic too, we didn't really work together as much. I think the international lenders sort of stuck together because their form of financing and the rules and regulations that they're subject to as foreign portfolio investors is different versus the rules that apply to local lenders or to DFIs. But I think it would be great, if we could stay in touch, Mr. Kumar, maybe share some ideas and discussions about the challenges that we see in the market. Sure. And then also discuss, what role do private international lenders like us versus DFIs like you would have in the market to support these NBFCs and NBFC MFIs. I definitely agree with you on the missing middle, but I also do want to note that, if you look at the NBFCs that are catering to the missing middle, you will find that most of them are supported by international investors and not so much by local banks and lenders. And then I don't know, of course, the perceived risk being high does impact local banks' perspectives. And then despite all the guarantee schemes as SIDBI has launched or Government of India has launched, it hasn't happened. So I did want to note that, if you look at that segment, right, the NBFCs that are currently about 1,000 crores and providing unsecured loans, and to this missing middle, you will see that 80% of the financing would come from impact investors and international lenders.
Yeah, they certainly will be taking it forward. We'll interact further and take whatever is possible together forward. Only thing is, those existing players who are working in this missing middle space, unfortunately, they are charging very high rates. So for the reason I said that first time, those people are standing on their feet independently, out of the comfort of the group, to have their own enterprise, they need support. And support means cheaper credit also is one of the support. Otherwise, they would die premature death. So this is what under Prayas we are trying to make. Certainly, we'll take this forward in our subsequent discussions and which way we can join hands. But then we want not just to make the credit access to this segment, it's also at the cheaper rate, at the rate which would make their enterprise viable. So we'll take it forward.
For this missing middle, this is something, it suddenly struck me that this is a huge gap area. And this has virtually been an eye-opener. And I can, visualize the challenges that this level people face. My only point would be, we recently, there are a lot of, I think technology and the new age startups will bring a solution to this. Recently, one of the new fintech startups, they contacted us, and they are, giving us a dashboard where an SME can merge their existing invoicing system with that, and only based upon that, they would keep enhancing the working capital requirements or CC limits of that particular SME, be it through purchase financing or factoring or different modules. So use one technology, and that technology through using artificial intelligence and other data collection methodologies would auto enhance the working capital requirements, and possibly, hypothetically, the enterprise never has to reapply or renew a loan or for enhancements, etc., with regular bankers. If this kind of technology goes at the micro level, people who get 10,000, 20,000, 50,000 finance, and because they are not registered with GST, and if somehow that digitalization, shows their positive growth, I am sure this middle level could also be impacted. So I see many solutions emerging in this, fast changing area, and the challenges would remain, but solutions also will keep popping up.
Wonderful. So we are going to make it right on time. And I want to thank everyone, Sumita, Nikunj, Arup, Rajiv, for such a wonderful and scintillating discussion. And I hope this conversation will continue online, offline, in virtual, in real. Thank you once again for being here.